Okay, so a quick use case scenario is you buy up here, the buy dips, and then you're looking to sell reps. So you're looking for something that looks promising because it hasn't really moved much. It hasn't left the train station, the bus hasn't left its depot, and so you're looking for good entries. QBCAD's a contender for a long. New Zealand dollar might be better, and so what we should be seeing is healthy green cells up here and then dark red cells down there. So Kiwi CAD could be a long, but if I was looking at the technical, I might be looking for something like this, where we get a retracement and then you know where to put a stop, right? So if you enter a market, you might get a bit chopped up. You could actually have a really good risk to reward. So 5.7R trade, right? So assuming that it's going to retain its score, a positive score, you could look for a retracement for the Kiwi CAD, or you could enter at market now with a stop here. Yeah, and you're looking for 1.5R, which is a poor risk to reward. So for me, I would be looking for a retest because you're going to get a better risk to reward. That's going to be a good place to TP. So that's the Kiwi CAD. So you could enter there, but your risk towards a lot poorer, or you could be patient and have an a buy order down here. So we should be coming up on the scores, but just to be on the safe side, you could place an order to buy down here because at least you stipulated just stop loss, and you're going to get a fantastic reward for your patience. Let's look at the NU. And so, yeah, likewise, it might be a case of doing the same. Long. So, yeah, I mean, here, you could have your stop there even, and then your TP would be there. So you're looking for a 5R trade. Okay, so you could have a wider stop just to cater for some liquidity here. And I mean, really what it's suggesting is that you enter a market, you can, but if you want to be safe, you can place orders. So if you were to enter a market on NU, where's your stop? There, right? You're going to get a 1-to-1. So therefore, if you enter a market, if you do a 1R, you'll just break even. It could be good. It could be good to enter a market, but for me, you want to get a better risk to reward. Okay, and that's it really. So it isn't a 5R trade much better than a 1R, you know, because you're looking at a lot of profit potential if you wait and be patient for the bounce. You might not get the retracement, but it doesn't really matter because it's not a loss. You know, if you enter a market, it might go into a bit of drawdown. And don't forget, we've got US holiday, and it might just be a little bit of a naughty day. So really, these should be going up. But if you want to be on the safe side, you can look for retracements in order to buy, and then you've stipulated your risk as well. Pound Swiss, maybe. See if we've got a thing. So that might be better. It's closer. So if you were like keen to enter a trade, you don't have long to wait for this one. And you have your stop here maybe, and you got a 2.2R trade if we target the super trend, or we've got a 3.23 trade there. So you're looking for a retracement for a buy the dip opportunity for a long, and that's not too bad. It only has to fall 30 pips. It might be fine. It might just rally because it's got a good score. It's up to you how you want to approach your trading. For me, I'd like to be patient and place orders. But if you were sort of thinking, I want to enter now, then you can enter now. But you just have to know that your risk reward will be poorer because you didn't stipulate your you weren't patient basically. And so that's that. So that's how I would use the scores. Look for them for confirmation of bias, and you're looking for technicals for entry. You can of course just open trades now, but where do you put your stop? You know, so that's why you want to refer to the technicals.